One of the most common questions that people do when they're shopping for home insurance is, how do I lower the cost of my home insurance? Especially with inflation happening and a lot of different changes in the market. That's a big question that's out there in the state of Michigan. I'm going to dive in and actually show you guys some opinions from some other agents, not just myself, that'll give you some of these answers that they came up with. The first way, and probably the largest way to get the discount, is to bundle your home and your auto. Hey, John, tell me one way to lower the cost of your home insurance.
One way to lower the cost of your home insurance, so that's an easy one. If you bundle your home and auto together, you save about 15 to 20%.
If you already have an agent you're working with, great. Go to them and say, I want to check with my auto, check with my home, and see if I can bundle those together. Now, that's not becoming as popular lately just because the fact that bundling home and auto is becoming more difficult. You have to kind of be that perfect scenario fit for those companies in order for them to offer that. So companies are being a little bit more selective as far as the type of policies that they write for the home and auto. The second way is to check your roof, see if it's been updated. And you can actually talk to the realtor that sold you the home or get the appraisal and find out from the previous sellers when the roof was last replaced. What's one way to lower your home insurance?
Ooh, one way to lower your home insurance. Honestly, the best way is putting a roof on it, which is get expensive. So I don't know if I'd recommend that as the only reason why you do the roof. A couple other ways is like a lot of companies now are doing the water sensors, so that's a good idea. It just checks if there's leaks in the house, so that's probably a good cheap way, and I don't think those are very expensive.
Now, insurance agents try to get that information up front because the newer the roof is, the better the discount gets. However, you can't always tell what it is, so they'll default to a 10 or 15-year-old roof or just go back to the date the house was built. Those are some things that can technically kick you out of a home policy if you have too old of a roof, because the damage there is a common claim, which raises the risk for the insurance company. The third way is to have a security system, and there's different versions of a security system. You can have just a standard alarm where you have those little magnetic strips where you put one on the door, one on the actual window, or vice versa. And when they separate, the magnet disconnects. Once that happens, an alarm siren goes off. Those aren't as great because honestly, you could just rip them off, stomp them on them, and then that's it. That's the end of the whole thing. However, that does still give you a discount. That's just a standard burglary alarm system. There's another piece that is called the central alarm system, and that's where it's actually built in your home, same sensors, but they're less likely to get broken or be in spots where you can't access those. So that type of system is actually going to notify the police as well. That'll give you the biggest discount as far as the security system goes. The fourth is to have a central alarm for actual smoke. So if you have a fire or a carbon monoxide, it's kind of like a smart home discount. So you're also going to have that same scenario. You have your standard, which is a direct, which is a siren. That's what most houses are. And then you have your internal, which is the centralized version. And that centralized version is going to give you that biggest discount. Once again, if there's smoke detected, carbon monoxide, if there's a fire, it's going to notify a fire department to send somebody out right away. 10 minutes on a fire can literally save your entire house. So an insurance company is going to give a fairly decent discount for that. The fifth is an association discount, and that's not necessarily your HOA. It's an association with any type of membership. So if you're a credit union member, typically there's a discount for that. If you are an alumni of a school, so you've gone to college and you got that alumni membership, there's usually a discount for that. The military, a lot of people have veteran discounts. A lot of companies do CPA discounts, any type of an engineering degree. So if you're part of an association, could even be the Harley Club. Those will and can get you discounts because it's a larger organization going to these companies and saying, hey, we have thousands upon thousands of members. If we recommend you as an insurance company, we want to make sure that we're getting a group discount. The fifth way is to just shop around. Honestly, that can make a huge difference. So it depends on the timing of when you're going to shop around. If you're close to a 3-year or close to a 5-year time frame with that company, you may want to wait a little bit longer till you hit those periods, because that 3-year and those 5 years are the best times to shop, or at least recheck the rates. I'm not saying there's always going to be a better price out there, but more often than not, you may just not be a fit for the company you're with anymore. By the way, if you guys are shopping, I'll put a link in the description below where if you're in Michigan, we also do a few other states. But if you're in one of the states that we insure, we'll link that below. Feel free to check us out. We can shop multiple companies at once. So if you're checking your Allstate, your Nationwide, your Progressive, your Safeco, a lot of those guys, those major carriers, we work with them. The seventh is before you purchase your home. So if you're just thinking of moving to Michigan, or you're just debating on whether you're going to buy a home or what location you should be in, know that that makes a difference. For the home that's in a rural area versus the home that's out in the country, those are two different risks. And the way that insurance looks at those is they rank them from 1 to 10. Once you get into the 7, 8, 9, and 10, there's a handful of companies that just don't do that type of risk. So you're essentially leaving out some companies that might be competitive. The quicker a fire station can respond, so the closer you are to a fire station, that helps. The closer you are to a fire hydrant, so they get access to water, or if you have a lake in the backyard, things like that can be a benefit if they have the right fire department. Essentially, it's the response time that the fire department can get to your home. Combining a good response time along with that security system that we mentioned earlier that'll notify if there's a fire, you're at a low risk of having a major claim. Number 8 is to raise your deductibles, and there's two versions of this. So you have your standard deductible. It's called an all perils deductible. That's essentially all the perils that are listed on your policy is how much you pay out of pocket. So if you have a theft or a fire or a pipe burst in the wall, something like that, you're usually covered up to the coverage amount you've selected. So coverage A, that coverage is going to have that max out, but you have an out-of-pocket cost. So it could be $1,000, which is the most common. You can bring that up higher. Before you do that, the first thing I would check is called the wind and hail deductible. The easiest way to think of what that's going to cover, wind and hail. So it's mainly your roof, mainly the siding, maybe mainly the exterior of the home. Having a larger deductible on that makes a bigger impact than changing that all perils deductible. So commonly what I see people do is they'll keep that all perils deductible at $1,000, maybe $1,500 if it makes a good impact. And then they'll do the wind and hail at a percentage. So you can do 1%, 2%, and as high as 5%. That percentage is based on your home. It's called coverage A, the dwelling. So if you have a $400,000 house, 2%, so 2% times 400,000 is an $8,000 deductible. That might seem crazy. That's more of the extreme situation where you need to get the price down. But now that you're willing to out pocket if a wind and hail claim happens, you're essentially purchasing your own roof and you're just taking on the responsibility. That's going to make a very large impact on the price of your home insurance. Number 9 is to remove excess coverage. That's one thing you may want to take some time and read through the package that your policy came with. It doesn't always necessarily make a huge price difference because most of the higher level or the higher tier companies, they're going to put in a package. So they have something called Optimum or a special discount that you get all of these different packages where it can include the water backup with it. It can include full replacement cost on your personal items. It can include an extra outage. So if your house was worth more from inflation and you had a claim, that you can include 10, 20, 30% more to cover the home so that you're not losing out of pocket as well. Honestly, I think those are the best things to have on a policy, not so much because they're costly. They're not. They're usually about $100-ish a year, and that can lower the cost if you have to do it. But at the end of the day, it's usually not worth getting rid of if you have one of those policies that you need to have those additional coverages with. Number 10 is to do updates to the home. So check out the updates that have been done to the home. It's not just the roof. The roof is the biggest because that's the most claimed issue. There's also the electrical, there's the pipes, so the sink, the toilets, essentially the whole piping in the system if you have an older home. And then there's also the heating system. Those are the 4, including the roof, that is going to give you the best, actually only discounts that they offer for having those updated. And number 11 is working with the correct loan officer. This doesn't have to be that you're buying a home. If you're refinancing or if you purchased a home or are looking at purchasing a home, the right type of loan officer can make a difference. Now, I know that doesn't directly impact the insurance cost, but that loan officer has a little bit of pull with the insurance agent. Not necessarily to change the coverages, because it really has to be what it has to be. The value of the home is the value of the home. The cost to replace it is the cost to replace it. However, when those two agents and the mortgage broker and that loan officer are working together, then that's going to give you the best ability to get the lowest rate as well as to get the right home price. Sometimes they have to tweak things to get you a better interest rate, ultimately saving you money in the end of the process. If you're not working with the loan officer, or if you're just curious about what loan officers we work with, I'll put a link in the description below to where we can refer out any loan officers that we work with. We don't get paid by them by any means. It's just people that we've had good success with. And the 12th way is to avoid claims altogether. I know that sounds kind of dumb to say because, well, obviously I'm not trying to have claims. But if you do have a claim and it's a minor claim, you have to debate if it's worth it. The home insurance is based on the number of claims you have. There's no one to blame. You can't blame the pipe. You can't blame whatever. You can blame a contractor, but then that's not an insurance claim. That's the contractor's problem. That's a whole nother situation. However, if you have small claims and it's not worth filing, avoiding those types of claims can help. Also, maintenance on the home helps you avoid those claims. If you clean the gutters, it's not going to back up water. If you make sure the windows have caulking around them so that if it rains heavily, you're not going to get rain coming into the home. Check the roof every so often to make sure that there aren't any shingles ripped off or broken. They do free inspections on roofs if need be, as long as you trust the person, because there's been some weird things that roofers have done in the past, not to say that they're all bad, but we'll try to link in the description below some roofers that we've worked with as well. And there you have it. Those are the 12 ways that you can lower your home insurance. There are many, many more that you can do. Honestly, talking with your agent is going to be helpful. There's a link in the description below if you're looking to get a quote. Otherwise, I'm Mark with Valor Insurance. We'll see you soon.